Yes, the Columbus Day holiday left the markets kind of drifting, but slightly higher. We did have below average volume. In fact, it was our slowest trading day since January the 2nd. The bond market also closed. That also made for that below average volume. The S&P 500, as Pim was saying, climbing for a sixth day. That makes it the longest winning streak since June of 2007. But even with the small gain that we got in the S&P today, the S&P closing at a one-year high. So not a lot of conviction, but to many it kind of felt like the calm before the storm. Before we get started with more of these third quarter earnings reports, which will be flooding again once again starting tomorrow. And ahead of those earnings, Black & Decker, one of the biggest individual gainers in the S&P on the day. Also, that stock jumping to its highest level in 11 months after raising its third quarter earnings forecast. And crude oil rising to a 6-week high. That led many of the energy shares to be the biggest gainers in the S&P. Crude oil closing out the New York session up $1.49, closing out $73.26 a barrel. And along with that advance in oil and energy, you saw metal prices also rising, but the dollar declining. Ford gaining this after the car maker saying sales in Europe increased 12% in September as new versions of the Fiesta and other subcompacts attracting some buyers. Remember, Ford is the only U.S. car maker that was able to avoid bankruptcy. And on the earnings calendar for Tuesday, Johnson & Johnson releases those earnings before the opening bell. Intel, CSX, Altera releasing those earnings after the closing bell. And ahead of all these earnings, Stanley Nabby, who oversees $8 billion at Silvercrest Asset Management, says the market will continue with its positive bias. He thinks that the earnings coming out this week will be very solid. He also says the economic data that's been coming out is quite encouraging, so he's very positive on the market right now. That's it from here at the New York Stock Exchange.